Let us see how do you calculate the value of the goodwill under the weighted average profit method. Ritu and Ricky are partners sharing profits in the ratio of 2:1, and for the last 4 years they were entitled to annual salaries of rupees 1,20,000 and 1,80,000 respectively. The net profit before charging partners' salary as per the annual accounts were as follows. Year ended March 31, 2013, 4,50,000, right? 2014, 3,50,000, 2015, 5 lakh. On 1st April 2015, Rini is admitted to the benefit of the partnership for 1/3 share. The goodwill for this purpose is to be valued at 5 years purchase of weighted average profit of the last 3 years, after allowing same salaries to partners. Profits to be weighted as 1, 2, 3, the greatest weight being given to the last year. Calculate the value of the goodwill. Now in this case, what has happened is you are given that the salary which they were drawing for the last 4 years is 120 and 180. You're given the profits of the last 3 years. The goodwill is to be based on 5 years purchase of weighted average profit of the last 3 years, and the weights are also given. In case of this question, this 4 years does not have any significance. Why? Because you are calculating the goodwill based on profits of last 3 years. So only these 3 years are to be considered, right? And not the 4 years. It's only meant for distracting you a little bit. Just pull out the information which is relevant to you, leave the remaining one. So let us look at the years which are there, right? So which are the years we are looking at? 13, 14 and 15. 2013, 2014, 2015. How much are the profit? 4,50,000, 350 and 5 lakh. So profit before salary. How much are there? They are 450, 350 and 500. 450,000, 350,000 and 500,000. Now kindly note that the net profit are before charging partners' salary. How much are the partners' salary? 1,20,000 and 1,80,000. And it has been consistent. So the total salary is 3 lakh. So salary to partners is 3 lakh, 3 lakh and 3 lakh. One thing I want to tell you is that even when you are calculating the weighted average, right, it is of the profits. So if there are any expenses which have not been considered, you need to first reduce them. So what is the profit after adjustment? $450 minus 300 is 1,50,000. Here it will be 50,000, and here it will be 2 lakh. Right? Now, if this were a question of normal average profit, we would have just done the total of all these profits and done the average of that. But we are looking at a case where you have to find out the weighted average profit. Now, what does this mean? Why is it that the weighted average profit is to be applied? What is the significance? Why don't we use the normal ones only? In a business, it is assumed that what happened as recently as last year or a few months ago has more value as to where we are going rather than the value or the significance of the numbers 2013, because the business condition changed. So if the business condition was same, right, everything was same, you were living in an ideal world, normal average profit method would have worked well. But the assumption, or not the assumption, the reality is that if I made some profit in 2013, it is not necessary that in 16 also I will make the same profit. It can be an indicator, it may have some value, but not as much as what we have in 2015. And therefore, we give a weight which is more to the recent year. Now, in some cases, you may believe that probably the weights have to be equal, the weights have to be lesser for the middle year, but generally the assumption is that the weights are higher towards the period which is as close to today. So in this case also, if you see profits to be weighted as 1:2:3, the greatest weight being given to the last year. Which is the last year here? The last year obviously is 2015. So 3 is the weight given to this, 2 is the weight given to this, and 1 is the weight given to this. Once you give these weight, you find out how much is the product. Product of what? The profits vis-a-vis the weight. So 150 into 1 gives you 1,50,000. 50 into 2 gives you 1 lakh. 2 lakh into 3 gives you 6 lakh. Right? Then you do the total of the weights, which is 6 in this case. You do the total of the profits, which is 8,50,000 in this case. Right? So if you find out what is the weighted average profit, it is going to be equal to the weighted profit divided by the sum of weights. Or in other words, it will be 8,50,000 divided by 6. Right? Now, you are given that the value of the goodwill is 5 years purchase of weighted average profit of last 3 years. Right? So the value of goodwill will be 8,50,000 divided by 6, which is the weighted average profit, into 5 years purchase, or in other words 5. Right? When you solve this, the answer you are going to get is 708,333. Right? That is going to be the value of your goodwill. So if I have to recap, you first arrive at the profits for the respective years, you assign a weight to them, find out their product, the sum of the product is divided by the sum of the weights to arrive at the weighted average profit. Then you multiply it by the number of years purchased to get the value of the goodwill.